Everybody's been talking about how hot the Calgary real estate market is, but it is about to crash. We're going to see prices decline the next 45 days. Hey there, and welcome back to Prairie Real Estate. My name is 𝗳𝗶𝗶𝗱, real estate agent in Regina, Saskatchewan. That's my trusted assistant, Matilda. This is the weekly news recap. I go through what I think are the most interesting Canadian real estate related news topics, give my thoughts and opinions on them. But of course, we'll start this off with another one of my terrible bad dad jokes. What did one ocean say to the other? Nothing. They just waved. If you have a terrible joke I can use in the future, put it in the comments below. Let's get into this week's real estate news. Let's start off by talking about banks revising their predictions on how much the Bank of Canada is going to drop interest rates. 2 weeks ago, both CIBC and TD came out with forecasts expecting the Bank of Canada would cut interest rates by 175 basis points, that's 1.75%, before the end of 2025. Now with some volatility in the market, there's some banks forecasting seeing 200 basis points or 2% of cuts before the end of 2025. That of course would have a significant impact for those that have variable rate mortgages. It doesn't impact those with fixed rate mortgages. That is impacted or driven by what happens in the bond market, and that has been trending down. We're going to be looking at what's going on with the fixed rates in this week's best mortgage rates available section coming up real quickly here. For those on variables though, if this does end up happening, we will see those variable rates cut nearly in half from where they started this year. And while we're talking mortgage rates, let's get you filled in on what are the best mortgage rates available this week. Last week, Citadel had a clean sweep, having the best mortgage rates available in every category I talked about here, but Citadel isn't available outside of Ontario. So this week again, they'd have a clean sweep, but I'm just going to talk about mortgage rates that are available across the country. Again, remember that this does vary province by province, and the lowest mortgage rate is not potentially the best mortgage available. You got to look into the fine details before you select that mortgage. Starting off with insurable mortgages, the best 3-year I could find was through B2B, 4.79%. The best 5-year fixed I could find, 4.44, available through MCAP. When it comes to variable rates, 5.65 was offered through CMLS, that is an adjustable rate mortgage, and 5.55 was available through Manulife, that is a fixed payment static variable. For uninsurable mortgages, the best 3 I could find, 5.19 through CMLS, the best 5-year fixed was 4.89 through Manulife, and the best variable 6.2 through MCAP, that is adjustable, the best static variable 5.99 through TD. When it comes to big 5 banks, here's the best rates I could find for a 5-year insurable mortgage. CIBC 4.64, unchanged from last week. Bank of Montreal 4.84, also unchanged from last week. TD 4.85, that is updated a little bit better. RBC 4.94, that's also a new rate. And Scotiabank 6.59, that is down from last week's 6.79, but Scotiabank typically has much better rates early in the year, and then they get significantly worse as the year goes on. Now, I just want to put this into a little bit of context for you. So let's say you're making a $500,000 purchase, 5-year insurable fixed mortgage. The cheapest rate available, which was through Citadel, would cost you about $2,700 a month. And the most expensive, if you went through that Scotia mortgage, was $3,400 a month, a difference of $700. Now let's take a deep dive into the Canadian Real Estate Association's monthly stats. The Canadian Real Estate Association releases their stats package the 15th of every month, so I'll make sure to add those into my weekly news recaps when they come out. I've been kind of neglecting to talk about them. I want to start off with new listings because this chart is really interesting. There are more new listings this past quarter, Q2, than there were previous year, but less than Q2 of 2022 and 2021. So this idea of a wave of new listings that a lot of people have continued to talk about as mortgage renewals come up, we're still not seeing that. Of course, everybody wants to talk about home prices, and this chart from the Canadian Real Estate Association, I think it demonstrates a point I make all the time on the channel, and that is there is no such thing as a national real estate market, but instead very local markets. Just looking at the national stats, you're going to see we've got a year-over-year price decline. But then when you look at each province individually, you get a very different picture. BC, Ontario, both showing small year-over-year declines. PEI's in there too. That one's a little bit of an oddball. But then look at every other province on this chart, and they're showing 4 to 10% year-over-year price increases. That is the impact that the specifically Toronto and Vancouver markets have on the national stats. They're down, they drag down the national stats, while the rest of the country is seeing year-over-year price increases. And this trend continues when you look at the sales numbers. Again, nationally, well below the 10-year average. But that again is dragged down by what we're seeing when very slow markets, Toronto and Vancouver, whereas the prairies are seeing red hot markets, record years for sales, and Atlantic Canada still continues to see a very strong market. The last chart I want to talk about here is the sales to new listing ratio, basically showing how many houses are selling versus how many are being put up for sale. And if you look at this here, the 10-year average is 55%, meaning essentially only half of houses listed for sale actually sell. And I know if you've been in the Toronto market for the last 10 years, that seems crazy because basically everything's sold, but that's not true historically. If you look right now, when we talk about how slow the market is, well, the sales to new listing ratio, 53%, or only slightly below the 10-year average. Now let's talk about Oxford Economics forecast for the Canadian real estate market, and they're anticipating more price declines. One of the things I really try to do when I have these news articles is also go and find the source material if they're referencing reports and forecasts. In this case here, I, for the life of me, couldn't find the actual source material. I went through Oxford Economics website and couldn't find it. If you manage to find it, shoot it to me in email because I actually want to read through the full report. So we're just talking about what the news article says here. I want to preface this by saying that I find Oxford Economics forecasts rather pessimistic most of the time. As an example, December 2023, so 8 months ago, they were forecasting that home prices in Canada, they'd see a national decline of 5% by mid-2024. Well, since that forecast was made, we've seen the national aggregate home price increase by 5%. Not year over year, but since that forecast was made. They also made very pessimistic forecasts in 2020, much like CMHC, where they were projecting, I think Oxford Economics said something like 25% decline in home prices, and we all know how that went. Starting with Toronto and Vancouver, they're projecting the home prices will decline an additional 7 to 10% by the end of 2024. I could see home prices being down 7 to 10% year over year. I'm not so sure we're going to see an additional 7 to 10% declines in basically the next 4 months. And here's the whopper from the article. And honestly, I think there has to be an error in this article because I just can't see Oxford Economics forecasting that home prices in Calgary will decline 5% by the end of the third quarter 2024. That's in 45 days. That would be a $30,000 price decline in the next 45 days, setting us back price-wise where Calgary started 2024. I'm not a betting man, but I'm willing to bet this one just doesn't come true. I can't see a world where that's likely. And no, I'm not just saying that because I don't think home prices decline. I would also say the same if they said that home prices in Toronto were going to increase 5% in the next 45 days. It's just not going to happen. What do you guys think? Will we see home prices in Calgary crash as Oxford Economics is forecasting, or is it maybe an error in this article here? And you should check out this, which is my most recent monthly Canadian real estate market update. If you love this video, please give this video a like. I always appreciate that. And subscribe to Prairie Real Estate if you haven't already. Thanks very much for watching.